Hello traders, welcome back. Market Analytics, Wednesday morning today, and we're back on the crude oil. It's been probably around 10 days or so since last time we were here. Price was basically just coming out of that purple system, and that was a major event for us, right? It was a very decisive breakout of that 55.91, that top resistance, and that was a sign that price had done trading sideways, and it's actually back on the upside, probably ending a period of technical downside correction, meaning merging back with the original upside trend, right? Basically starting to build up the next positive segment as far as we're concerned at this point. So that was basically what we concluded out of that breakout of that 55.91. Now, ever since then, price kind of traded sideways. We've seen some positive momentum at the first few days. Then we had that encounter against that 230 moving average, right? And we've seen price kind of flirt around with that moving average. Eventually, however, breaking down. We've seen a pretty strong single-day downside move, which have been compensated over the last few days, right? I think the main event here is what happened here yesterday, because yesterday you can see that price had managed to cross back above the moving average after it actually failed the day before, right? The day before, price was actually attempting to break through, kind of failed, and then it made it yesterday. I think that's a good sign. Don't forget that looking at the big picture, we suspect that we're looking at a classic Elliott wave cycle, where this particular move right now, I mean, ever since basically the beginning of 2018, December 2018, this particular move here, we feel that it might be the last impulse wave, the fifth wave, which should take the previous major high right here. This is the top of that move. Basically, this is the third wave, right? So we've seen the fourth wave coming down pretty strong, and now we think that this is the fifth wave. We've seen the first upside segment, and we've also seen the technical correction that followed that move, and we think now price is coming back up again. So it bears obviously if that's the case, right? So we should expect price to hit not only the previous local high, which is right here, but also the previous major high. If we take this, if we look at this from, the long-term perspective, right? But looking at this from a short to medium-term perspective, here are the main targets I would like to focus on. So the first one, 60-80. 60-80, that's actually a 76.4% Fibonacci correction. This time, correction to this downside move, because we might actually be in a correction phase of the downside move, right? We might actually be wrong on the big picture conviction. So if we are wrong on the big picture conviction, we might be able at least to catch a technical correction and still be profitable, if you know what I mean. Anyway, if that's going to be successful enough and price will continue to push forward as we suspect it will, then of course we should be aiming at the previous high. That's still the local high, not the big high, not the major previous high, but still that's a pretty important level to take under consideration. 66.50, that's probably going to be the final destination for this particular bullish campaign. I should also mention the fact that we've been adjusting the stop loss level to 54.50, as you can see, still well below the main point of reference that we're using here, 55.91. That level supposed to be a strong support from this point on. Obviously, also I should mention the 200-day moving average, which by now also is supposed to be quite a significant support level from this point forward. All right, guys, that's about that. Should be interesting to come back on this on the situation here with the crude oil, follow up and see how things have played out. Hopefully we'll do exactly that. All right, that's about that for this one. We'll see you on the next.